The futures are reflecting, of course, all of this breaking news overnight. Let's bring in right now Jason Barsema. He is co-founder and president of Halo Investing. Jason, good morning.
Good morning. It's an exciting morning.
Yeah, well, it certainly is. I mean, we're talking about 50 billion, but all of this is and still, we think, a negotiating tactic from the U.S. Because the president has been very clear he is dissatisfied with the trade agreement between the United States and China. But is this taking it a step too far?
I don't think so. Again, as we talked about in the previous, or you were talking about in the previous segment, right now, nothing is set in stone. These are just all proposed tariffs. Nothing, at least on the United States side, is going into effect until May. And it's a retaliation tactic. And obviously, the Chinese want to retaliate and save some face on a $50 billion tariff that we slapped on them. And they hit back hard with soybeans, but it's still not the nuclear option.
Well, but we are seeing pressure in soybeans this morning, we should say, to your point. And also, we're going to have to watch shares of Boeing today. Aircraft is another place where the Chinese have threatened to levy tariffs and retaliations against our plane. But what do you make of the tariffs that we're imposing on them? They're targeting now, the U.S. is. And again, a proposal. This is not in stone yet. Medicine, medical equipment, chemicals, tools, as well as dishwashers, televisions, auto parts. Now, some analysts say you can impose these tariffs, but you are going to end up with the American consumer being taxed on all of this at home.
Absolutely. I completely agree with that statement. The tariff that we imposed was a very wide swath of different products. At the end of the day, we have to be very careful with trade wars and tariffs in general, as we've talked about many times, because they're inflationary. And so if these tariffs do go through, both on China and the United States, you'll see inflation creep up in the U.S., which is obviously not good for the current financial markets.
It certainly isn't. And again, we want to reiterate that we are seeing a sell-off this morning on the Dow. Right now, the Dow is down 405 points in the pre-market. This, of course, is after what we saw yesterday, which was, of course, a reversal of fortune at least. But we had Monday's sell-off. The volatility. This is going to be a long process, Jason. Are we going to be in for these volatile trading days until the middle of May when we start to actually get official action on what could be tariffs against the Chinese?
I think you're going to see volatility for the rest of the year. Again,
rest of the
geopolitical risk.
Really?
Rest of the year, yeah. Geopolitical risks and global macro risks are impossible to model and impossible to predict. And right now, between the conversations we had in the technology sector and Amazon, and then a potential global trade war, you're going to see a ton of volatility shake out. Not to mention, given where markets are. I mean, let's not forget the rally we've had over the last 8 years. And the Fed starting to kind of unwind its purchases, obviously, and raise interest rates. And no one's been talking about the ECB, it seems like, for the last 2 weeks. I think that's the biggest macro risk that's coming at the end of the year.
Why do you say the ECB? Why the ECB? Why are we ignoring that?
Well, they're going to be reducing their QE, right? So interest rates in Europe are artificially low when you look from a government perspective and a corporate bond perspective. So as the ECB starts to unwind its purchases like the Fed has over the last few years, interest rates are going to go up. And you're going to get this kind of cumulatory effect across the world of rising interest rates. And that's my biggest concern, is you're going to see a reflationary trade where interest rates in Europe rising leads to rising interest rates in the United States, which destabilizes the equity markets here. I think the 10-year could go to 3.25 by the end of the year, which will have some serious impact on equity markets.
It would certainly, and that would affect, again, the consumer. You got to bring that home to what that would do to consumer credit, what that would do to mortgages, what that would also do to the buying power of the U.S. consumer, although the Fed has said that they do see inflation ticking up through 2018. What about U.S. companies? What about CEOs that are out there, Jason? I mean, this is a long process. They've got until May 22nd. There's an official hearing on May 15th on these tariffs, right? They've got until May 22nd, companies do, to respond to all of this. They can't make their voices known. We have a president who has opened up the White House to American CEOs. Why aren't investors, I see this knee-jerk reaction happening right now in the futures market. Why aren't investors thinking about the longer-term prospects, that this all could be a lot of rhetoric so that the U.S. gets the Chinese right where they want them, to the negotiating table, to do exactly what the president campaigned on, which was deal with the unfair trade practices that the Chinese impose on the United States?
I think you're spot on. Look at what happened to Korea, right? Very similar on a smaller scale, obviously, but very similar effect of kind of the imposed tariffs that we're going to put on Korea, and we worked out a pretty nice deal. The same thing's happening with China. At the end of the day, nobody wants a trade war. The Chinese Ministry of Commerce and Finance has been reporting, live as we're on the air right now, of saying that a trade war is not good for anybody, but they are going to save face. I think from the U.S. perspective, the administration is listening to CEOs. That is really important, and no one wants a trade war. Again, it's a lot of rhetoric that I think will be worked out.
Bringing them to the negotiating table. We certainly hope so, and we'll see how the markets play out this story again today. And gosh, Jason, I hope you're wrong about volatility through the rest of 2018. That is a bit of a scary prospect. We do appreciate you jumping on the breaking news with us this morning, though. Jason Barsema.
Thank you for having me.